Hi Cryptotunities community, Julie here. Welcome to another exciting week in our crypto and equities trading room life, where we have seen multiple gains trading with TAS OSPIC framework. There's a significant shift toward crypto through Bitcoin exchange traded funds as institutional players make bold moves. Bitwise CEO Hunter Horsley predicts a substantial surge in Bitcoin ETF holdings by wealth management firms by the end of 2024, indicating growing institutional interest and confidence in Bitcoin. BlackRock's I is on the brink of surpassing Grayscale's GBTC as the largest Bitcoin fund globally, reflecting trending institutional reallocation. Other heavyweights like Fidelity and BlackRock are seeing notable net inflows into their ETFs, signaling a shift in investor sentiment and liquidity dynamics. Growing adoption of BTC ETFs by registered investment advisors and multifamily offices marks a milestone in broader acceptance of crypto in TradFi as they seek to diversify portfolios capitalizing on Bitcoin's potential. On-chain data suggests Bitcoin miners may have been behind the price decline. On-chain analytics revealed miners selling their holdings, leading to a 12-year low in their Bitcoin reserves, dropping below 1.9 million BTC. The trend of outflows from miner wallets has intensified since the approval of spot Bitcoin ETFs earlier in the year. The selling pressure from miners may have contributed to Bitcoin's stagnant price, eventually leading to the correction sub 60K. However, Bitcoin has rebounded from the $60,000 level. With the fourth Bitcoin halving event behind us, anticipation within the industry has risen, but miners are still expected to sell up to $5 billion worth of BTC, potentially impacting the price further. The Runes protocol has sparked a new trend in tokenization and market speculation, particularly with Bitcoin-derived tokens. These tokens, such as Zfehu and RSI Genesis Rune, are experiencing price discovery and significant trading volumes on platforms like OKX's NFT marketplace. With unique characteristics and limited liquidity compared to established cryptocurrencies, these tokens boast high market valuations that can fluctuate widely in nascent markets. Examples like Satoshi Nakamoto illustrate the growing interest, with thousands of sales and substantial trading volume. Other notable tokens include Meme Economics and the ticker ELSA, attracting buyers for various reasons, from provenance to speculative potential. While the future demand for runes-based tokens remains uncertain, enthusiasts are optimistic about their potential value rise, although some may see the trend as temporary. Victory Securities, a Hong Kong-based investment firm, has disclosed proposed fees for Bitcoin and Ethereum exchange-traded funds, ETFs, despite the Securities and Futures Commission, SFC, not yet publishing an approved list of issuers. If approved, investors will face fees ranging from 0.5% to 1% of the total transaction, with a minimum fee of $850 for primary market transactions. Secondary market transactions will incur fees of 0.15% for online transactions and 0.25% for telephone transactions. These fees are comparable to those set by US asset managers offering spot Bitcoin ETFs. Hong Kong recently approved spot ETFs for Bitcoin and Ether, drawing both praise and skepticism from industry players, particularly regarding their accessibility to mainland China investors. The BlackRock Bitcoin ETF experiences 69 consecutive days of inflows on the 420 halving day, adding to the sense of fate surrounding the event. Despite Bitcoin's sideways price action, the timing of the halving, coinciding with the meme date 420, is seen as almost too perfect. While Bitcoin ETF inflows have slowed since their peak in March, BlackRock's iShares Bitcoin Trust, ETH, continues to attract inflows without any outflows. Recent data shows momentum returning to ETFs, with IBT and Fidelity Investments ETF seeing significant inflows. However, concerns arise from first quarter allocation data, suggesting that Bitcoin ETFs have not penetrated the mainstream majority as expected. Robert Kiyosaki, author of Rich Dad Poor Dad, explains why he won't invest in spot Bitcoin exchange-traded funds, ETFs, emphasizing his preference for owning physical assets like gold and silver coins, mines, and real estate. Despite previously advocating for ETFs as an alternative for hesitant investors, he now prefers staying away from Wall Street's financial products and packaging his own securities. Kiyosaki, a self-proclaimed Bitcoin bull, predicts the cryptocurrency's price to reach $2.3 million and advises investors to ditch the US dollar in favor of Bitcoin, gold, and silver. Former FTX CEO Sam Bankman-Fried has settled with investors and agreed to cooperate in ongoing lawsuits against celebrities who endorsed FTX. This settlement, pending court approval, could significantly impact the legal battles following FTX's collapse. Bankman-Fried's cooperation aims to strengthen the plaintiff's case against celebrities like David Ortiz, Katy Perry, and Tom Brady, who allegedly promoted FTX's unregistered securities. The agreement requires Bankman-Fried to provide non-privileged financial information and aid in legal actions against those associated with FTX's marketing. Coin Center, a pro-crypto organization, opposes the Lummis-Gillibrand Payment Stablecoin Act, labeling it unconstitutional and anti-innovation. Introduced by Senators Kirsten Gillibrand and Cynthia Lummis, the bill aims to regulate stablecoin use and operations, requiring strict compliance with anti-money laundering regulations and maintaining one-to-one reserves for stablecoin issuers. Coin Center criticizes the bill for outlawing algorithmic stablecoins, which they argue violates First Amendment rights. They propose alternative solutions, such as mandating issuers to register with the SEC or implementing a 2-year moratorium on new algorithmic stablecoins. Meanwhile, global stablecoin market cap has grown by 21.95% in 2024, with Tether USD dominating at 69.1%, followed by USD Coin at 20.9%. The IRS has unveiled a draft tax form, Form 1099-DA, for reporting digital asset transactions, aiming for implementation in 2025. Brokers, including unhosted wallet providers, are mandated to report digital asset dispositions to taxpayers and the IRS using this form. However, Shan Chandrasekhara, head of tax strategy at CoinTracker, raises concerns about privacy and security, noting that the collection of additional data points, such as wallet addresses by the IRS, could lead to significant privacy issues. Chandrasekhara emphasizes that this form represents a shift towards less anonymity and more centralized oversight in the crypto space, potentially altering how users interact with platforms and decentralized finance (DeFi) protocols. Bitcoin users engaged in fierce competition for the 840,000th block following the completion of the 4th-year halving cycle, resulting in record-breaking transaction fees. Via BTC Mining Pool successfully mined this significant block, with users collectively spending $2.4 million in fees, marking the highest fee ever paid for a Bitcoin block. Additionally, Via BTC received a payout of 40.7 BTC, valued at approximately $2.6 million. The 840,000th block holds the first Satoshis, known as sats, post-halving, considered rare collector's items potentially worth millions. Concurrently, the launch of the Runes protocol by Bitcoin developer Casey Rodemore spurred intense competition among degens to mint tokens directly on the Bitcoin network. These activities saw users pay over 78.6 BTC, equivalent to $495 million, in fees to mint rare runes, showcasing increased adoption and participation in the Bitcoin network. The Shiba Inu community is facing a wave of scam attacks, prompting the Shibami Scam Alert to issue a critical warning. Phishing emails promising fake bone airdrops are targeting SHIB holders, aiming to steal personal and financial information. These scams mimic official SHIB branding and communication to deceive investors. The scam tracker advises community members not to click on any suspicious links and emphasizes that there are no legitimate bone airdrops. Unfortunately, scam activities, including phishing attacks, have increased across various crypto communities. Shibami Scam Alert has uncovered over 50 scam attempts targeting SHIB holders this year, highlighting the importance of vigilance within the community. Investor interest in meme coins is growing, suggesting their potential for mainstream adoption amid market volatility. As Bitcoin struggles to surpass key thresholds, more investors are turning to meme coins for their viral appeal and supportive communities. This movement toward mainstream acceptance could lead to broader adoption and integration into financial transactions. Here are 5 meme coins to consider. 1. SHIB. SHIB is gaining attention due to its increasing token burn rate. 2. Sloth. Slothana, a Solana-based meme coin, offers unique pre-sale opportunities and aims for high investor participation. Through Pepe, inspired by the Pepe the Frog meme. 4. Belly. Despite a downtrend, Belly attracts interest with its appealing artwork and strategic token allocations for stability and growth. 5. Dogeverse. Dogeverse is a multi-chain dog token available across various blockchain networks, featuring a pre-sale with soft and hard caps, staking protocols, and plans for exchange listings. Have a great week. Taz will see you in the room between 8:30 a.m. 11 a.m. Eastern, Tuesday to Thursday, for more live trading.